skittishness in tech stocks. We saw brief equity sell-off that's contributed to the sea of red in crypto. Tax season means they're selling across markets. And look, let's be very realistic. Bitcoin up 300% since the start of the year. It's very normal to see 25 to 40% corrections and pullbacks. What we're seeing, the majority of selling activity we've seen over the last week has been from new holders. People are coming in, they're getting spooked. Weak hands are selling. We also see skittishness as we see a lot of uncertainty around stimulus in the macro climate contributing to selling, primarily retail driven. Also, if we look at the option side of the market, skew has been bearish for the last 2 weeks. So if we look at order books, right, traders have been primarily positioned on the short side, expecting a correction. I think right now, and if we look at the data right now, that sentiment is flipping. We're about as bearish as we can get. And again, this isn't about tweets. This is about using data to inform our perspective. Last week, for the first time, we saw over 50 million in outflows in crypto exchange traded products on the Bitcoin side, continuing to see inflows into Ethereum. And we see a lot of sector rotation as profits that have been realized.
Well, that's down too.
Are now going further out on the risk reward spectrum into other assets, including Ethereum, Solana, FTT, just to name some. But there is a broader base sector rotation. Crypto's not immune to it, but I wouldn't overstate the impact that any one person's tweets can have on this market.
I'm really impressed. You both just came armed for this conversation today.
That was good.
Just to dig into that a little bit more, Jill, I mean, there's Bitcoin and then there's all of these other cryptocurrencies as well. And now there's more focus on stable coins. That's starting to grow given the news we saw around Diem last week, too. As investors do think about and potentially do, I guess, shift out on the risk curve and rotate into some of these other crypto assets, what are you looking at? What seems most promising or most hopeful to you? What would you steer clear of?
Yeah, no, it's a great question. And I think that it's one thing that's been missed in all of the fear and uncertainty that's been kicked up over the last couple of weeks around Bitcoin, even around Dogecoin, and specifically around the proof of work systems that they rely on.
Yeah.
The fact is, there are plenty of other coins out there that don't rely on proof of work. And so if that's your issue, Elon, or whoever out there is listening, then I would encourage you to do research into those. You know, you have the likes of...
They're ripping on them.
Which is testing all-time highs actually at the moment, despite the overall market weakness. That's a proof of stake system. You have Chia, which I know has been talked about. Kramer was talking about it earlier this morning, which is a proof of space and time system. You have all of these alternatives to proof of work. That's for a long time been a part of my thesis. Not that those are necessarily perfect replacements for Bitcoin, but there are certainly good alternatives if that's a concern that you have.
Yeah, Meltem, I mean, there's this growing landscape of coins and offerings right now. Coinbase last week said that they're working to list Doge on that exchange. How are you thinking about that specific cryptocurrency? How are you thinking about some of the other ones, including the ones that Jill just mentioned?
Yeah, that's a great question. Again, at CoinShares, we offer the market what we think there's demand for. We primarily deal in crypto exchange traded products. We have $5 billion in AUM there, have been doing that since 2015.
Oh, they're a crypto broker. Now it makes sense why they're like going nuts on what's his name, Elon.
In our view, there isn't a lot of demand for Doge from anyone but retail buyers. Let's not forget an important structural shift in the market as well. In 2017, when we saw this last bull cycle, traders, retail traders in particular, were trading crypto on platforms where they could only move in and out in Bitcoin or Ether to some degree. Today, retail traders can access Dogecoin, Tesla, Nikola, you name your favorite penny stock or hype stock or meme coin here, all through one interface. So we see a lot more correlation between some of these meme-driven assets that are seeing a lot of inflows and outflows and a lot of volatility. So I think it's important to recognize we focus on the institutional demand. The institutional demand is still heavily focused on Bitcoin. We're now seeing more inflows, over $3 billion in AUM in Ethereum-focused ETPs accumulated just in this year alone. Totals about 10 billion out of the 60 billion total in crypto asset ETPs. So we are seeing, as people get educated, more interest in assets outside of just Bitcoin. But again, in our view, Bitcoin will remain the dominant asset for some time to come. It is the most robust in terms of market structure, really is.
Yeah, to that point, Jill, really quick, B of A today, their fund manager survey said long Bitcoin is their most crowded trade. I know some people are watching the 200-day at around 39.5. What needs to hold?
Yeah, no, it's a great point. I saw that same headline.
This is a really good segment.
To me, I think that that's actually net a bullish signal for the market. If you look at how far we've come, the very fact that B of A is putting out that headline and saying that goes to show how much demand and how much real demand, institutional demand, has come into the market over the last 3 years. If you had told me that that headline was coming out 3 years ago, I would have laughed. Even I wasn't that optimistic
right.
then. And so, look, I think it comes back to what Meltem says. You know, the institutional demand needs to hold. And if this little bit of weakness, and it is only a little bit of weakness in the grand scheme of the volatility that crypto has seen over the last 10 years. If that has changed any of these institutions' buy theses around Bitcoin, then they didn't do very much research to begin with. They need to go back and revisit their diligence.
Maybe you're right. Maybe the institutional backdrop makes this correction different than the ones we've seen in the past. We'll have to wait and see. Guys, thanks so much. That was great. Appreciate it.
Thank you.
These ladies crushed it. That was so good. They're so good. Oh my gosh, that was a really good. Oh my gosh, they just destroyed. That was really, really good. Wow. I mean, one of the favorite things here is if institutions change their minds about buying Bitcoin because of basically Elon Musk's tweet, then they must not have done a lot of research about Bitcoin. In addition to the talk about mostly newer retail traders being the ones flowing out of Bitcoin right now because maybe they've gotten spooked because they bought, right during the Coinbase hype or whatever. And Jill talking about this real potential diversification maybe into other coins, but for institutions, Bitcoin still being the favorite, and that, hey, this is just part of the normal 20-40% correction that you get in cryptos, and this is what you sign up for. I have to say, there are definitely some mic drop moments there. That was good. I enjoyed that. I wish they addressed the fact that Ethereum is going down with Bitcoin. They did not address that, despite this talk about people moving from Bitcoin to Ethereum. But if they are a coin broker and that's what they're seeing, it does not surprise me. In fact, yesterday I was talking about how I think it would be not a surprise for institutions to diversify their holdings into BTC and Ether. And it is also crystal clear. We talked about this yesterday. We pulled up the S1 for Coinbase, and we clearly saw their charts on institutional activity for trading substantially taking over the crypto landscape. But also, another interesting fact from Jill here was that there's just a lot of bearish options activity right now, which is institutional trading, basically puts or shorts on Bitcoin. And this makes sense because it's actually also something that I talked about a few days ago when I said, hey folks, I think one of the reasons we're seeing this crypto sell-off is because there's more shorting happening on the institutional side. I kid you not, I said that a few days ago. You can watch my crypto videos, they're all labeled. And we talked about that. Why? Because what got beat up earlier? Tech, consumer discretionaries. People shorted the junk out of them, and they made lots of money shorting. Bitcoin and the cryptos have been at all-time highs. Short them so you can make money when the punch and bag rotation comes over there too. Really, really, really good, impressive segment. Loved it. What an amazing way to end this live stream. But folks, I'm late for the course member live stream. This segment was very good, but I gotta take care of my course members, folks. I gotta go. I appreciate all of you. Thank you so much for being here. We'll see you in the next one.